Market update. Today is February 17th, 2025, and my name is Alejandro Zambrano. I've been trading for many years, starting already in 2006 with a live account. And I'm going to share with you my input or my outlook on the market, a couple of insights that could possibly help you with your own trading. Before we start, though, I need to stress that trading financial markets, unfortunately, is high risk and you may lose all of your invested money. Moreover, I'm going to share my view on the markets, but this is not to be taken as investment advice. Okay, good. So, what happened last week, and can we build on that? Yes, we can. We can definitely build on that. I'll explain that in a couple of minutes with the charts, but let's talk a bit about the details first then. So last week, risk appetite was strong, and this is despite US inflation exceeding or reaching 3% annually. It was at 2.9% and then reached 3%. Now, despite this, the NASDAQ 100 rose by 2.6%. The dollar weakened, and crypto remained range-bound, a bit boring, while oil declined and gold hit a new all-time high. So let me explain why this actually happened. So risk appetite was strong primarily because the Fed downplayed inflation. Okay, so the head of the central bank said that the labor market is no longer a major inflation driver. Now, I don't know which world he is living on because the non-farm payrolls wage growth increased 0.5% monthly, and the unemployment rate declined to 4%. Plus, you have deportations in the US. So I don't know exactly where he's coming from with this because it's extremely strong labor market in the US. But for now, at least, labor market not generating any inflation according to Powell. And then number two as well, sort of largely ignored the strong inflation print. So this allowed, say, NASDAQ 100 to gain and also caused the dollar to weaken. But there was more to it last week. So another thing that happened is that Trump, which has been targeting Europe in different meetings and, well, statements really, and interviews, now moved away from that and talks a bit more about reciprocal tariffs. What does that mean? It means that if, for example, EU has a 10% tariff on cars from the US, then the US would implement 10% tariffs on European cars. Okay. Now, what's happening here, which is quite interesting, is that in certain countries, say for example India, they decide to lower tariffs, so it doesn't even become an issue. So maybe the same is going to happen across the world here, and that would be beneficial for all the economy because it's going to be more business. Now, the problem here is that what is a tariff? Now, for some reason, the Trump administration seems to think that VAT, value-added tax, is a tariff on American goods, while VAT is something that is actually added to, say, all goods in Europe and all goods in England. And even in the US, they have, in certain states, something similar, where there's a tax on gross revenues, which acts the same as a VAT. So that could be a problem, that could be a sticking point. The other thing as well, which is a big news, of course, that there is hopes for peace between Russia and Ukraine, and that obviously sent oil prices lower. Why? Well, because before the war, Russia was producing 11 million barrels per day. That has dropped probably roughly to 9 million barrels, so they lost about $2 million, so 2 million barrels per day in production. Now, if things if there would be like a good peace that everybody likes, then sanctions could be lifted, and we could see some maybe 2 million barrels hit the market again, which would be good for Europe and much more cheaper to import energy. Definitely supports the Euro USD move to the upside. And also to give a bit of comparison here, so those $2 million barrels is roughly the same, slightly less than the $2.5 million that OPEC Plus tends to expand its production with. So they want to expand their production by 2.5 million barrels, slowly increasing this month over month over 18 months, starting from April 2025. So if this will go live, it will be literally the same amount of oil, more or less, which would flood the market and would probably send oil prices lower. So that is obviously could be very beneficial for the world economy, in particular Europe. So what can we look forward to this week? In terms of market volatility, I would look for the RBA, where they're probably going to cut rates from 4.35% to 4.1%, but it's not a done deal 100%. So people are not 100% sure, which means that if they don't cut, the Australian dollar could probably gain quite a bit, and if they do cut, they could lose quite a bit. Why is it interesting, and why are not people sure? People are not sure because inflation just reached 2.4%, but it's only been 1 quarter. As well, the unemployment rate remains relatively stable at 4% right now, and hasn't really changed too much, okay? And then you have GDP growth, which is weak at 0.8% annually, which is obviously not great. But the economy is holding up relatively well now, so that's why it's 100% sure, and that could create some nice volatility if you want to trade around that event. We also have UK unemployment figures on Tuesday as well in the morning, and we have UK unemployment inflation figures, the day after at the same time. Now, by the way, this is, now this is another very interesting event, which will be the New Zealand Central Bank. They're definitely going to cut. The question is if they're going to cut with 25 basis points or if they're going to cut with 50 basis points. So why would they cut by almost up to 50 basis points according to consensus estimate? Well, because GDP is really bad. It's contracting with 1.5%. That's a huge loss. And as well, inflation is at 2.2%, and it's been there for 2 quarters. So that's a full 6 months. And that is a good victory for the central bank, because now inflation is at its target, but also the unemployment rate has been rising quite sharply. It was sort of in 2021, it was I think 3.1%. Now it's at 5.1%. And obviously, maybe they're too late to the game, right? Because the idea with the central bank is that you're supposed to start to cut before things turn really bad. Maybe this is going to go up to 6% now, so more people are going to lose their jobs just because inflation, they wanted to make sure it was remaining at these low levels. And maybe, I think, and I suspect that the RBA is looking at the RBNZ, giving that they're very close neighbors, to maybe cut early here to not be forced to have like a jumbo cut of 50 basis points just because your economy, the wheels are coming off your economy. What else? FOMC minutes. Will they provide too much info? I don't think so, given that Powell spoke last week, but people keep an eye on it. Then you have Aussie employment figures on Thursday. Depending on what they say here, maybe this could accelerate, especially if the unemployment rate deteriorates. And then you have jobless claims. And then on Friday, you have a ton of data, which is you have the PMIs, but as far as I understood, it's the second estimate. So it's not the first estimate, which tends to move the market. It's the second estimate. Now, let's take a look here at Euro USD. So we had some very good success in Euro USD over the last couple of months. This was, we were sort of bearish on the way down here, and then we're bearish here on the election. On the actual election night, we said look to be bearish for this to go down to parity. It went as low as 101.82, and the market has since stabilized. We sort of stopped out, I think, here, and then this worked out fine at the end, and then I think, well, I know we got stopped out here, or the view was stopped out. So if you look at this today, you might say, okay, what's going to happen next? Okay, so it's a bit difficult to say exactly what's going to happen next. Let me just switch off some things here. So it's a bit difficult what's going to happen next here, but I think as long as we cap to our 105.31, we might go a little bit lower, maybe to 104, and then we'll see. Because ideally, if it goes down, we'll have a double top that we can work with on a break to the upside. But I suspect we're dealing with something like this, like some sort of a channel, and then at one point this is going to be a trend line here, and we're just going to go down. But I think we're in this phase right now, but it's too early to take a strong take on this. But I do think we're going to go up. Why? Because if you look here at GBP/USD, it's reached this double top and this high here. I think GBP/USD as well wants to do something like this. If you look at AUD/USD as well, we stopped trading lower and lower highs, less problems with the tariffs, maybe go up a bit higher as well. So I think they all do suggest that maybe the dollar is going to weaken a bit and your USD going to go up. How about oil then? So we discussed oil. So oil last week we said looked to be bearish from here to target the downside. That worked out fine. We reached those levels. As long as it's below 77.23, I think people are going to sell. The only thing is here though, I want to point out. So the best returns are made when there is uncertainty in the market. Yeah. So obviously up here was the best time. We know that after the fact, right? Because when we're down here, we know that there's P stocks. So obviously the fact that there's P stocks now is quite a big development and helps to explain why we drop this amount. But the problem here is that when you have clarity, that's usually when you have least amount of money to be made. For example, COVID-19, everybody thinks that, oh, the world's going to go under. Well, that was the best time to buy stocks, right? Maybe similar here. But obviously, we're not going to disregard the fact that, we will have maybe peace at one point. So if the market goes up here, I think it makes sense to sell for this to go to the downside. How about gold prices then? So gold prices, last week we said look to buy here for this to trade to the upside. That worked out brilliantly. I still think we can go up to 3K. It's like a magnetic thing. It wants to reach 3K and then that's it. We'll see if it wants to push higher. If you adjust for inflation, gold can still go up quite a bit more. And as well, given, I think inflation is going to come back really strongly in the US. Maybe I'm wrong. But with the labor market being really strong and with the quotations in the way in the US, there's only 4% spare capacity in the labor market right now. Of course, if more people join the labor force, it can work out. The problem is this though, if you're living in a part of the country where there's not too much business to begin with, it's going to take time before people set up businesses there. Maybe because of deregulation there might be something, or other things could be maybe you haven't been working for a long time, then people will not necessarily hire you just because of that. So realistically, you'll have high inflation in the US, and that of course can drive in gold to the upside. So I think we can go to 3K. Let's see if it goes higher. The only thing that worries me a little bit is gold is having a lot of attention. So part of my role is to work and talk with the press. And there's a lot of requests where people want to know what's going to happen with gold. Even internally, I think markets, people want us to write more articles about gold. And again, it's a bit of a sign that maybe at least in the short term, there could be a bit of a top. But for now, bullish about 2,847. How about the NASDAQ 100? Well, here is what I would focus on a lot. So the biggest problem for the US economy was trade wars against Mexico and Canada. That has now been put on ice, and now tariff talks are less aggressive because I think the effective tariff rates that the euro has on the US is roughly about 10%. So it's not like very high amounts, which means that there could be some resolution here and it's not going to be too painful, which again allows us to push to the upside. What's the problem here then? The problem again is maybe the Fed at one point will need to sort of raise rates, but right now I think they're living under the fear of being punished by Trump and losing their jobs. So I don't think they're gonna rein in inflation. So then you have this rectangle, or you can call it inverse head and shoulders, to suggest a 5.8% push. So I think if we would go down, if you're not already long, I bought on the breakout. So if you're not already long, then if we would have a correction to 21,888, but do not trade below 21,711, then I think we could go up. How about Bitcoin? So Bitcoin is interesting, but it's sort of slowly pushing to the downside. There's not too much interest for people to hold on. Everything is focused on meme stocks or meme coins, and there's like a new coin launching almost every day. So the people, they don't have any like nice focus on anything. It's very difficult for the market to push to the upside. And Bitcoin as well here is just dead right now. There's only option I see is buying here. But you do want it to be on the lookout for more opportunities, because if we break the trend line, we can go to the other side of the range. That would lift all coins. And what I would focus on would be Litecoin at that point. So as we discussed on trading views, updates that we've done, we have, you know, like a ascending triangle, which is just a 34% move. And in Litecoin, as far as I understand, there's talks about an ETF floating. So that's why people want to get involved here as well. So the trick here would be buy at 134, you know, buying here, stop loss here. But I mean, I'm giving you very detailed levels here, but this is what I suspect could happen on the day. Then maybe if we're lucky, we can get away with a very tight stop loss of 4% unleveraged, which means that the risk reward ratio will be 8.24. So if one would risk like 1K, you make 8K, there's 2K, you make 16K. I think you get the message. So I like this, but I would like to see maybe Bitcoin break here, like the whole everything looking to push to the upside. And that's it. That's what we are going to cover today. Unless you have any questions, if you do, just put them in the chat. I'm going to review the chat right now and see if there's any questions. Okay, no questions, no worries. I'll see you next week then. If you are watching the recording, you have any questions throughout the week, you can leave them here. I do pop by and see if there's any questions. So yeah, feel free to leave a comment or just like a little heart, whatever you want. That helps the algo to boost our content. And that's how we know if we should keep on producing these videos or not. Thank you very much and have a great day. Goodbye.